It'll pop up and say like, so-and-so's waiting in the waiting room. And then on
There's only
the,
one other person on. Oh. 4 people there.
yeah, so this one's us. And then we have Sharice, Chanel, and John Anarelli.
Cool.
And if anyone else comes up, it'll say like waiting room and we'll have to admit them.
You can unmute them or they can unmute themselves.
They can unmute themselves, yep.
Okay, cool.
Alrighty.
Cool.
Thank you.
So we start now then?
Yeah, you can go ahead and get started.
All right, cool. What's up, everybody? My name is Ryan. I'm with IT's Credit. Since you guys have your mouth full, I won't expect you to do a lot of talking. But what I do want you guys to feel is that you can ask any questions. I want you guys to engage because there's a huge, huge amount of credit information that is out there that's not accurate. And what I want you to do is tell me what you do know, what you think you know, or what you definitely don't know, so that I can best, utilize your time because I know you guys are all very busy. Just real quickly about me, how I got into credit. I got into credit because I had bad credit. About 10 years ago, I took a business venture. I lost everything I had. So I basically had to start from scratch. I was at 500, had a bunch of, collections and all this debt that I was like, how am I ever going to pay it back? I eventually paid it back. But I realized one thing. At that point, I didn't understand that the credit that I did have was really helping me. Because when I had no credit, I realized how much it was really hurting me and how much it was actually costing me at that point. That's when I started to dive in and realize, okay, why can't I get a credit card? Why do my interest rates seem to be so much higher than everybody else's? And I was like, wait a minute, this is really impacting many aspects of my life. Can't get cell phones, we have to pay higher deposits, you definitely get higher interest rates on cars, and there's no chance of getting approved for a mortgage. That's when I started to dive into credit information and say, hey, how does this whole system work? And then I started paying for actual credit education. And when I started to invest in the credit education and knowledge, I realized we're not taught anything. How many people use credit cards? Okay. How many of you use them daily? Okay. The reality is you should be using credit cards for every single purchase that you make and for a multitude of reasons. Can you all hear me online on the Zoom call?
Yes, we can.
A little quiet. Is it better if I stand here?
Yeah, that's a little better. Yep.
All right. And again, if you guys have any questions at any point, please just chime in. Obviously, we don't want to forget you guys. But credit cards really are the secret to credit. And I'm going to dive into that a little bit later as to why, but I want you to understand credit really is simple and it comes down to 5 factors. Now, you all should use Credit Karma on a daily basis. And the reason I say Credit Karma, it's not because the scores are accurate, but looking at the scores, it's not going to change your scores. What will change your scores is understanding how the 5 factors of a FICO score work. When you can master those 5 factors, you can then master and/or what I call manipulate your score. The first factor is payment history. Now, if you look at Credit Karma, there's 6 factors. The 6th factor is derogatory marks, which would be collections and judgments. We can talk about that if you guys have questions, but I don't want to dive into that because that's only in that case scenario. The first factor is payment history. Now, most people, you would think paying on time should be an automatic assumption. You should just know you have to pay your bills on time. What people don't realize is when you look at the FICO scoring, the total scale, it goes from 300 to 850. That's 550 points. By missing one payment, I've had people that had a $5 bill on a credit card, forgot about it because it was small. I've done it for myself. They missed the payment. Your score can drop 100 points from one simple missed payment. Even if it's a $5 bill, it doesn't matter if it's a $2,500 mortgage payment or a $5 bill. One missed payment costs you 100 points. That could be a make or break between getting approved for mortgage or not getting approved, or getting approved for an FHA versus a conventional. And we know how important conventional loans are in this market. Make sure you pay all your bills on time, even if it's the minimum. Now, I want to touch on this real quickly. You never, ever, 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 ever want to pay the minimum. And here's why. Because you end up paying interest if you don't pay the balance in full. Okay? So when it comes to credit cards, always try to pay the balance in full. And if you can't, don't use that credit card again. It's real simple. But the reason you need to use credit cards is because if you're not using credit, there's no credit history being built on you. So then banks and lenders, they have nothing to judge you on down the road when you apply for new lines of credit. But that's why it's so important to use credit and to pay your bill every time. One of the biggest misconceptions people have, and again, I'm always going to come back to credit cards because they're the most common account that you can have on a daily basis, is making sure that you pay your bill at the end of every week. If you get overwhelmed with credit cards and they're scary to you, I have credit cards that have $50,000 and $100,000 credit limits. That's not to brag. That's because I've shown that I'm not responsible. Okay, you build this history, you build this trust, just like you have clients that you build trust with over time. By having, a big credit limit, sometimes that can be scary to people. So what do I tell people? At the end of every week, treat your credit card like a debit card. Instead of saying, okay, I have 30 days of spend, and then the next day I get a bill that says, hey, you spent $1,000, you've got to pay $1,000 on the 15th. On the 15th, you go to pay your bill, and it says, hey, you have $1,000 that is owed. You have a current balance of $1,500 because you had another 15 days to spend, but your minimum payment is 25 bucks. That's confusing and it's misleading. The first thing you want to know is pay it off at the end of every week. Treat it like a debit card. Your debt will never run away from you. You'll never miss a payment, and then you'll never pay interest. And interest is the cancer of all finances. People paying credit card interest is the absolute cancer of finances, because once they have that first month where they don't pay it in full, then it's a snowball effect. And I've done that before when I was 20 years old, and we all know how that goes. But make your payments at the end of every week. If you're not good with finances and budgeting, make your payment at the end of every week. It's a real simple way. You never miss a payment. Any questions on payment history? No? Any of you guys have any questions on payment history?
I have a question.
Sure.
So they look at credit card usage as more important than, say, paying your Pico bill and your car payment and all those, because that's how I look at my credit. I don't have credit cards, but I have bills in my name and a mortgage in my name.
That's a great question. I'm going to actually cover that in part in the next topic. But yeah, here's the reality. And again, I'm going to try to speak a little bit more loudly for you guys. Did you guys hear that question on there? The question was, she has a Pico bill and like an car insurance bill. She doesn't have credit cards. And she asked, do the credit bureaus weigh that information more heavily or credit cards more heavily? And the answer is, if it doesn't report on your credit report, if it doesn't show as a monthly account, it's not affecting your credit, which could be bad and could be good. If you're not paying it, it's a good thing. But if you have a Pico bill, it doesn't show up in your credit report, it's not giving you any credit history for it. So it's not helping you at all, even if you pay on time. That's why one of the biggest problems they have with credit is people paying rent who are trying to get approved for a mortgage. They've been paying rent for 15 years and none of that history shows. So how do you work around that? You have to have alternative lines of credit, which would be credit cards, personal loans, auto loans. And I don't suggest people go get those types of loans. There's types of loans that we can talk about. But the second factor, going on your point, is revolving credit card debt. Credit card debt or credit cards, they have what's called credit limits. Now, hey, how you doing? I don't know who that is, but nobody's a nice guy. All right, so this is a credit card. This is a charge card. For those of you who can't see, this is a charge card. This is a credit card. The difference, this here doesn't have a credit limit. So when you look at a credit report, it will say there's no credit limit on this card. Say, well, why does that matter? It's real simple. Credit card utilization accounts for 30% of your credit score. You're not using credit cards. You're missing 30% of your credit score because they have nothing to, again, gauge you off of or base you off of. Why is that important? It's really simple. When you have credit cards, let's say, for example, you have $1,000 limit. You spend $250 a week, you're going to max out your credit card at the end of the month. They look at people, and there's actuaries out there who calculate this stuff. If people who max out their credit cards, most people, they can't pay them back at the end of the month, or they simply don't. And then what happens is they either accumulate more debt or they miss payments. And then that makes them not reliable or trustworthy in the eyes of lenders or in banks, anybody who's looking to extend new credit or new credit accounts. Credit cards are the most important tool because they're the shiny object in your pocket. How many people, 18-year-old kids go to college, they get a $500 credit card, and what's the first thing they do? They go party. They don't think, I got to pay this all back. And that's why credit cards is the easiest tool for you to show whether you are responsible or are not responsible. Because if you can handle $1,000, $5,000, or $10,000 credit card, chances are you're going to handle a $25,000, $35,000 auto loan, and later eventually a $250,000, $450,000 mortgage loan. That's why establishing credit and learning to use credit cards is a huge tool. Now, one of the better ways to manage credit cards The first thing you want to do, and I don't care what anybody in this room or anybody knows in this room, get as many credit cards as you can, at least 5 in your first couple months or years of establishing and building credit, because they are seeds. You have to look at credit cards as seeds. When you get that credit card, the first thing is this: credit cards never close. As long as you pay on time and you never miss a payment, they'll keep that card open forever. What's the next factor? Age of credit history. Auto loans, they come and go. Credit or student loans, well, they should come and go, but student loans seem to linger around forever. Mortgages, they should come and go, and they eventually do. Credit cards will stay open forever, as long as you pay on time. When you go to get a house, after, let's say you started building credit at 18 years of age, and at 38, you're going to get a new house, another house, you've got 20 years of history. You can easily have the lowest interest rates because you can show that I've been responsible with my bills and with my finances.
I have a question.
Sure.
So I have probably 4 or 5 credit cards,
Mhm.
but I only use 2.
Okay.
One of them I used in the past, it's paid off, 0 balance. I think the other 2 are 0 balance as well. And there's 2 that I use.
Yep.
Does that matter?
Yes, and that's a great question. So there's a new FICO, there's a FICO 10 and FICO 10T. The question was, he has 4 credit cards, he only uses 2 of them. Is that good or bad? That is good. You want to have multiple credit cards, and I will say that each credit card you should use at least once a year. Okay, that way they keep the account open, especially if it's one of your older cards. Use it at least once a year, pay it off at the end of the week, the end of the month, whatever, and it'll stay open. What you want to do with your credit cards is you want to use the cards that 2 things. Number 1, give you the best cash back or rewards, or number 2, have the highest limits, so that when you're using that credit card, if you have too much spend on it, like let's say, for example, you have a $10,000 credit card and you only spend $1,000 on it a month, that's great. Even if you only put $1,500 or $2,000 on it, that's great, because you're staying below 30% utilization. There's a magic date in the world of credit that nobody talks about. Has anybody here, and anybody on the Zoom call, has anybody here ever heard of or know what a reporting date is on their credit report? Nobody. Okay. The reporting date is the snapshot date that the banks actually take a look and they say, what is your credit account doing? Now, on an auto loan, all they care about is, did you pay on time? On a mortgage, all they care about is, did you pay on time? When it comes to credit cards, what they ask is, on this reporting date, now that reporting date is typically the end of the cycle date. Could be a plus or minus 1 or 2 days. That reporting date says, his total credit limit is $10,000. How much of that credit is he using? How many here has a maxed out credit card? Nobody probably answers that, that's okay. Some people put their hands up and make that. How many people here know that they have credit cards with more than a 30% balance on that credit card? Okay, you guys are all great, that's awesome. The important thing is, on the reporting date, you never want to have any balance that is exceeding 10%. You should be using both those credit cards. You want to make sure both of those credit cards at all times, you want to make sure that the balance is below 50%. On the reporting date, you want that balance to be below 10%.
So whenever they say, hey, you qualified for, you can up your limit.
Mhm.
you say, yes.
You always want it.
Okay.
So for example, the way that the credit scoring model works, if you use Credit Karma, you'll learn this. Anything from 0 to 9% credit utilization is good. You actually get points in your credit score. They reward you for being smart and for being low risk. Even 0 to 9%. That's a good question too. Your overall utilization, I'll break it down even more. You have an overall utilization and then you have individual utilization. You do not want your overall utilization to be 0. It can be once you're in the 800s.
So within the 5 credit cards,
Mhm.
everything's 0 but 1 credit card, and you have to pay 1 to, is it 9?
1 to 9%.
You're okay.
Perfect. Yep. Yeah.
Debit cards count as credit cards or no?
No. If it is not a credit account, it is not building and showing credit history. And that's why it's important, again, like we said, it's okay to have 2 cards that you don't use those credit cards. Use them once a year. Unless they're cards, like, for example, I'm gonna show you. Gold card, this is my dining card. This is like personal dining when I go out, I can use this at the supermarket and it gets 4%. I use it dining and I get 4%. So essentially for every $100 I spend, I get $4 back. Debit cards don't do that, right? And I'm not knocking debit cards, but they don't do that. If somebody steals the digits of this card and they go and they buy $700 worth of airline miles or airline flights, which happened to me. I call up Amex, they said, wow, that happened just 7 minutes ago. I said, yeah, I didn't book it, but where am I going? And they started laughing, like, well, we don't know, but we know that they spent $700 some odd dollars. Immediately, they canceled the transaction and they overnighted me a new card. With a debit card, I had it happen to me even longer ago. I had to wait 3 months to get my money back because they had to validate and make sure that I really didn't spend it. There is zero liability. Do you guys ever see the movie Catch Me If You Can with Leonardo DiCaprio? Leonardo DiCaprio has his name is Frank Abagnale. He did a speech at Google and said credit cards are the best tool because there's 100% zero fraud liability. If somebody steals your card and they spend on it, you don't have to pay it back as long as they know it's not you, which most cases you'll easily be able to figure it out. But I have a dining card. This is my my business card. This is my business goal. This is for all my business transactions, anything I do for business or work. You don't need my license. This is my platinum card. This is my travel credit card. The reason I use these is because this gives me 5 points back on all travel and hotels. This is a Bonvoy card. I use this right now because right now I get $20 a month of free dining. American Express is trying to support local businesses. If I spend $20 or more, I get an automatic credit on my account for $20. So if I go to Santucci's Pizza and I grab a pizza, it's $25 for whatever I got. Within 2 to 3 days, they credit me $20 back. This is a Sapphire Reserve. I use this card this is like my backup card. If I can't use Amex, I put everything on this credit card just because I like Chase Ultimate Rewards. Then I have Costco. Anybody shop at Costco? I get about $300 every year in cash back from Costco. Just for making Costco purchases and buying all my gas at Costco. I get $300 back just from Costco alone. And then this is my everyday card. This is for all Amex purchases that I make. All my utility bills go on here. If I go to like Walmart or if I go wherever. Now I have other credit cards, but these are the cards that I use for my spend. This is what works for me. And right now I currently have over 640,000 American Express MR points. I could fly 6 people to Hawaii and back for free. I've already looked at it because I'm getting married next year. I'm trying to figure things out. So the point is using credit cards is a huge tool because not only does it help you build and establish credit, not only does it give you anywhere between 10 to 15 or 30 days to pay the credit back, it's building a history that's going to help enable you to get the best, insurance rates, the best interest rates, all the stuff, simply by using credit and paying it back. Got it?
I couldn't help but notice that they're all Amex cards.
Sure.
Amex used to be the least preferred card. Not everyone that took it.
Yep.
Why did all the Amex?
So for me personally, it's twofold. That's a great question. The first thing is their customer service. I have Discover, I have Barclays, I have Chase, I have Citi, I have Amex, I have Police and Fire, I have credit cards with all these companies. Their customer service is hands down the best. No questions asked. The second thing is I like the Chase or the Amex portal. Even though Chase, they say that with Chase points, you might be able to get a slightly higher return on the points. I prefer American Express because of where I like to go and what I like to do. Sometimes Chase is a little bit better. For me personally, it's just like if you prefer TD Bank over Wells Fargo, sometimes that's personal preference.
I guess that meant compared to like a Visa or MasterCard.
Okay, so a lot of local businesses, and I won't say a lot, but there's definitely some local businesses that won't accept American Express because American Express merchant fee is slightly higher. So for example, if you go to pizza shop and you swipe your credit card, they charge 2%, 2.5%. American Express may charge 3%, 3.5%, depending. So for me, I just prefer American Express. For merchants, the reason they don't take it is because it costs them more money. So if I'm selling you a $10 pizza, and let's just say it's 2% versus 3%, some people, they may say, I'm not paying the extra percent for American Express. And there's a lot of articles out there saying that there's a lot of people that pay more money because of all the American Express cardholders out there. You can read a lot of crazy stuff, but does that answer your question? So any other questions with regards to credit cards, using them, understanding them? I think I have one on the end of your tongue. No, you're good? Okay. So again, the reason I always talk about credit cards, guys, is because credit cards is the way you're going to get, you're going to more quickly and faster be able to build credit history, and you don't have to go into debt. Okay. It's not like if you go to get a personal auto loan, maybe you'll get a personal loan to take care of some things at your house, maybe you're paying for vacation. An auto loan, we know that Don't go out and get debt just to get debt. There's accounts out there like Self-Lender and Credit Strong. You can go and get these loans, they're personal loans that basically you pay in every month, and at the end of the year, you get all your money back. But it reports as a personal loan to all 3 credit bureaus. So you're essentially building credit, putting money into an account, and then 12 months, on the 13th month, you get your money back. That's a way to do it if you want to have a little bit more credit diversification, which is talking about total number of accounts. Anybody right now know how many open active accounts they have? Anybody? Does anybody use Credit Karma on a daily basis? Okay. All right, so this is me opening up mine right now, just so you can all see this. All right, so 800, 804. And this is Credit Karma. This is not FICO. FICO score is different, okay? I'm not showing, it's just to show that I know what I'm doing. Like, you can go to a fat person and learn how to be straight, right? You're not gonna go to somebody who's got a 5-point credit score and say, hey, teach me how to get in a credit score. They don't know. They're all smoking here. Okay? If you look here, total credit, this is available credit. Can't really see that. Can you say the number there? 2%. That's 2% utilization. What's the number underneath that?
Total limit, 226,000.
So I have $226,000 of available credit. That does not include those charge cards that you saw from American Express. The reason for that is because charge cards, like I said, they don't show credit limits. They just show credit. I was just saying, guys, about the credit cards versus charge cards. Charge cards don't show credit limits on the credit. What do you call it? This is my credit score. You can't see that, can you? Nope, 800 anyway. But charge cards don't show credit limits. Okay, so what happens is whatever you spend that month, you have to pay that month. That was one of the other reasons why I loved American Express. When they started off, they didn't allow people to pay interest indefinitely. They said, if you spend $1,000, you pay $1,000. I respect that. Now the American way is, hey, great, I'm gonna spend $1,000 and I'll spend the next 15 months paying that $1,000 off, which is gonna cost me $1,400 to pay the same $1,000 off. That's why so many Americans are in debt and in trouble, because they don't understand how the credit system works, and they don't understand delayed gratification. Everything's gotta be immediate. Now, going back to the total accounts, the reason why you wanna have 10 open active accounts is because that shows account diversification, and it shows that you can manage and handle accounts. Most people would say, that's all crazy. Guess what? The banks made these rules. They made these rules, which is why we have to follow, because otherwise we're gonna pay for it in interest rates. I mean, if you know you're getting the best interest rates, then that's fine, you don't care. But if your credit score is hurt and now you're paying an extra, for example, if you look at right now, take a car calculator, price out somebody who has a 700 credit score versus somebody who has a 550 credit score. The difference in that car, I ran the numbers. If you took a $25,000 car over 5 years, you would pay $6,000 additional interest over the course of 5 years between having a 720 credit score and a 550 credit score. $6,000 of additional interest over the course of 5 years, just because you don't have a good credit score. Okay, having multiple accounts again shows that you can manage, your credit accounts, and it shows that you're responsible. Because if you're not missing payments, you're going to have all those payments stack up, which is going to help you. The last thing is credit inquiries. Now, most people think having a credit inquiry is a really bad thing. Remember, the scale is from 300 to 850. One credit inquiry is going to cost you 5 points. 5 points is less than 1% on a 550 scale. It's not a big deal, unless in a 30, 60, 90-day window, you apply for a credit card, you apply for a car note, you apply for a mortgage, you apply for a personal loan, because now all of a sudden the banks, which they all have third-party data on you, trust me, there's way more information than you guys can imagine as far as consumer, data points on each individual consumer in the country. But they take a look at all this. As long as you're not doing that, then it looks like risk. Either you're going to flee the country, or you might be dying, and you're just racking up all this debt. There's crazy stories that that exist out there. One inquiry will never hurt you. Now, people say if you're going to get a car, or let's say you're applying for a mortgage, let's say you get 5 people that pull credit on you. That's perfectly fine as long as it's within 1 week's time or 2 weeks' time. They say 14 days. Some people will say 30. I say 14 days. You don't want to have more than 3 to 5 pulls in a 14-day period. If it's outside of 14, it may cost you an additional 5 points, and that's when all of a sudden you start to look more risky. But if you're shopping for a car, if you're shopping for a mortgage, it's okay to have 2 or 3 banks pull your credit all within a 2-week period of time. You will only lose one amount of credit inquiries or pulls, so it'll only be 5 points, but you will have all those inquiries show up in your credit report for 2 years. You lose the 5 points for 1 year, the inquiries stay on your credit report for 2 full years. So a soft pull is basically, it's an internal pull where they're looking at the same data, but it's not as conclusive. So a soft pull is where they're not actually, it's not what's called, well, in the mortgage world, it's a tri-merge report. But it's basically, they're looking at the same, it's like Credit Karma. Credit Karma uses what's called the Vantage scoring system. The Vantage scoring system is very different from the FICO scoring system. When you look at FICO scores, there's 28 different FICO scoring models between credit cards, personal loans, auto loans, mortgages, student loans. They have all these different variables to the scoring model for FICO. A soft pull looks at a lot of that information, but it's not it's just not a hard inquiry. Why they even allow it, I don't know. I mean, it's not a why can't you? Yeah, a soft pull won't affect your credit at all. Why something like this? Because it's a good question, and I don't necessarily know why they do it, but they look to see people's spending habits with particular line items. So like, for example, if you never miss an auto payment, you may have a really high auto score. Right. So when I went and applied for my car loan, I got it 2 years ago. My auto score was 792. Right. My mortgage score was 745. And they were both in the same month.
So you have different schools for different.
Absolutely.
Yeah, I took some, real estate, continuing education, and they were explaining how many different FICO scores there were.
Mhm.
And it's like, I can't even think of that many different accounts based on what I consume it.
Right.
To even understand like how they view me as a, credit visitor. So I was thinking like, you said 29, I think they said 40 something, and I was like, what could I possibly be paying? Cars, one, house, maybe K Jewelers, Costco card, store credit line somewhere like a mom and pop place, like or a Best Buy in-house account. But how many different, like, it just didn't make any sense why I could create that many and then you're judged by that many things. And then it's only 3 euros, right?
So there's 3 actual credit bureaus, but there's a whole bunch of third-party data centers like Innovis, LexisNexis, Cavers. There's
I heard Capers.
okay, so there's a whole slew of them.
That's the student loan.
Cavers is a student loan one, correct?
Yeah, because that kills mortgages or, mortgage applications sometimes.
And a lot of people will say, oh, well, I had a credit repair person and they removed this from my credit report. Well, guess what? If they run a Cavers report, I'm not giving you $300,000 without doing my due diligence on you. They'll run a Cavers report, an Innovis report, a LexisNexis report, and if anything shows up on those, on top of pulling tax transcripts and other stuff, they're not giving you the money.
Understood.
So, and, also going back to with the FICO scores, there's 28 different FICO scores, but they also have FICO 2, FICO 3, FICO 4, FICO, like a mortgage is FICO 2, FICO 4, and FICO 5. Credits, or for auto loans, they're looking more towards FICO 8, which is what most credit cards and everybody, they're using FICO 8 right now. FICO 9 is out, FICO 10 is already in development. FICO 10 deals a lot more with credit cards because more and more people are trying to get into the credit card game. Why? Because they like free cash back and free travel. I make over $1,000 a year just in free cash back from credit cards. Now, some people say, so what, big deal. I'm like, if I put up $1,000 right now, how many people right now aren't going to take it? I'm taking it, free travel. When I started dating my fiance now, we started going on trips and she's like, oh, let me give you money. I'm like, I didn't pay for it, but free trips. She's like, how? I'm like, credit cards. And she's like, oh, I thought credit cards are bad. Everybody thinks credit cards are bad. They're not bad. They're bad in the hands of bad, irresponsible people. When you understand how they work, and you understand how to use them, they become huge financial tools that can help you for the rest of your life. Imagine if you were 18 years of age and you graduated high school. What would you prefer? $800 cash or an 800 credit score? What's going to help you do more? Right. Long term, that's going to help you do more. The cash is good. Maybe turn it into a small business. Awesome. Most people don't know how to do that at 18. Again, that's another thing we're not taught, how to start businesses. But an 800 credit score is going to open up doors of opportunity. You can get your own cell phone. You can get your own apartment. You can get your own car. You can buy your own house as long as you have the cash and the income to back it up. But I have people that make $300,000 a year that call me and they have a 550 credit score and they don't know why. Because they were never taught. They don't understand how it works. Any other questions? Any questions about credit cards, disputing?
Kind of leading off what you said, because I've taken like financial classes before,
Mhm.
and they all tend to lean not to have credit cards. Like
Sure.
to pay cash as much as you can. A lot of times you'll get things less expensive by paying cash.
Mhm.
But it's, I just like, how do you get it?
So there's an old expression, cash is king. There's a new expression, credit is power, at the bottom of your sheet. The reason for that is this. Try to go buy a $500,000 house with cash. How many people can do that? If you can't do that, how do you get it? You gotta have a credit score with credit history, and that's how you get approved for the mortgage or the loan to get that house. Now, using cash can be a good thing. I always would say this, if you can't afford to pay your credit cards off at the end of the month, you should be paying cash until your credit cards are paid to zero. If you have one credit card that you can't pay in full, you shouldn't touch that credit card or any other credit card again unless your life depends on it. Because otherwise, all you're doing is you're getting deeper into debt. And again, debt is the cancer of your finances. So yes, people will say use cash, but right now, especially since COVID, how many places don't take cash anymore? A lot. It's another reason to use credit. Well, what if you don't have credit cards? You gotta use your debit card. That's cool. What if an emergency pops up? I can't tell you how many 0% 18-month credit card offers I get every single month. When I bought my engagement ring for my fiance, I put it on a card that gave me the most amount of points. Then I did a balance transfer. I had 18 months to pay that card off with 0 interest. That's good living. It's not that I didn't have the money, but why not just slowly pay it off? It's almost like putting it on layaway, except I got it. Only because I had credit and the credit scores and the credit cards to do so. So that's one of the reasons why I would say always use credit. And again, cash is never a bad thing. But when you go to buy a house, if you've paid cash, which I have a lot of people that come to me, because I work for a mortgage brokerage, just so you know, that's how I got into the whole credit space. Like 40% of all people get denied for a mortgage purely because of credit, something on their credit report. And I was like, how do I solve that problem? Because if I can fix that, I can add a lot more people to my pipeline by helping them understand credit. Now, most people, they think they need credit repair. People come to me, they have 550 credit score. Like, you don't need credit repair. You don't have bad credit, you have a lack of credit. There's a huge difference between bad credit and a lack of credit. Bad credit means you have collections, means you didn't pay bills. It means you have outstanding balances. It means you have charge-offs. Maybe you had a bankruptcy. That's bad credit, okay? Sometimes you'll find a credit repair company that can actually help you. Most of the time, all you need is a little credit knowledge and a lot of daily discipline. And the reason I say daily is because at first it's daily. Every day, if you're checking your credit report for the first month, 2 months, you start to really look at factors, and then it starts to become this mental game. My brother came to me after I first started doing this. He came to me because he saw me traveling for free. He knew that I had cards, and he's like, listen, I need to be humble, and I got to tell you what's going on. He had a 415 credit score. He had just had his 3rd kid, just bought a house, and 5 months later, his boss let him go. After 10 years, he basically trained his replacement. And he came to me with a 415 credit score. 2 years later, we disputed nothing. He went from 415 to 750. Refinanced his house, got rid of the bad debt that he had on it, paid off all of his other debt, got 3 new credit cards, and was able to get a new car. All into like just over 2 years. Wasn't quite 2.5 years. That's because I taught him how the credit system works. What I teach him? Use a credit card every day for every purchase. Pay it off at the end of the month, at the end of the week. Don't wait till the end of the month. Okay? Use your credit card for every single purchase. If you can't pay it off at the end of the week, which is why I say start with small increments. You don't have to go right to $100,000 credit cards. You don't have to go to having $500,000 houses. Start small. Start with something that's easily manageable for you. Understand how that one little thing works. Then add a second card. I always say start with cashback credit cards. Why? Cashback's easy to manage. It's real simple. I spend $100, I get $1, $2, $3, $5 back. I have credit cards that give me 6% cash back at the grocery store. I don't use it because I don't want cash back. I want the points. I find the points are better.
How long does it take for a bankruptcy to get off of your credit report? And why is it now people can claim multiple bankruptcies? I always thought like once you claim bankruptcy, you can reclaim it. But I've met people who claimed it 4, 5, 6 times already.
So that's a good question. First off, there's chapter 7, there's chapter 11, and there's chapter 13. Sometimes they're personal, sometimes they're tied to businesses. Depending on how they have it structured. I'm not a bankruptcy expert, so I'm not gonna speak deeply on it. There's multiple different levels of bankruptcy. I know people that have filed bankruptcy more than once. They clearly didn't learn their lesson. Now, there's some people that go into business and business things happen. Hey, not that I'm okay with that, but that's, if you're taking the risk of being a business owner, that's huge. If you're somebody who just doesn't pay your bills and you declare bankruptcy to have somebody pull out that magic eraser, I don't really want to help you actually. But I don't know, the particulars of the situation you're talking about. I just know that there's multiple, again, 7-Eleven, 13, depending on what their situation was, and if it's corporate, if it's personal, if it's business, there's a lot of variations in there, I don't know. I do know that it stays in your credit report for 7 years. It will stay there for 10, they can see it for 10 years, but it's only supposed to be there for 7 years. And even if you get a bankruptcy removed, that doesn't mean, again, it's a clean slate, because there's other third-party companies out there that, again, if you're trying to get a $300,000, $400,000, $500,000 loan, they may say, hey, it's not on your credit report, but Innovis over here is telling us that you still have this, what's the deal? And if that's there, you're dead. No good.
So I subscribe to Experian.
Okay.
They attracted monthly and all that, but they have this thing now where they
Boost?
count, what's that?
Boost.
Yes, like, does that really boost your score? I haven't done it where they want you to link your bank account and use that to track your Hulu paying accounts and your phone bill and your electric bill and all that stuff.
Yep.
What are your thoughts about that?
So here's my thoughts. First is, the most I've ever seen Boost ever help anybody was about 25 points. Okay? Here's the second thing. It only helps with Experian. So if your other two scores suck, you're still screwed, because you need 2 of your 3 in order to get approved for a mortgage.
Right.
Here's the last thing. I've had people that use Experian Boost, and all of a sudden, their $400 cell phone bill pops up. Their $1,200 rent bill pops up. Their $350 cable or utility bills pop up. Their $250 cable bill pops up. Guess what? Now they don't qualify for anything because the income ratio just got blown out of the water.
So it actually hurts your debt ratio.
It kills your debt income ratio. Now, if you're smart, well, not, that's true. If the mortgage company is smart, they will look at the rent and say, this is rent. We can at least omit this because we know that will no longer be on there. If you happen to need it. If you happen to need 5, 10, 15 points in order to qualify, then I would say, sure, go for it.
But now you're exposing all your liabilities.
Absolutely.
On a credit report.
And you're paying for it.
And you're only doing it on one report.
And, right, and you're only doing it on the report. Now,
Right.
I don't recommend you pay for anything.
Yeah.
Okay, so people pay for Experian Boost, people pay for my FICO, people pay for stuff. I use 6 apps. If you want to write these down, I'll have to tell you. Credit Karma. Again, not because the scores are accurate on any of these, it's to monitor my scores so that if anybody pulls credit in my name, if I miss a payment, one time I forgot to make a payment. It wasn't 30 days late, which if it's not 30 days late, it never affects your score. But the bank will say, hey, you didn't pay your bill this month, man, what's up? They get nervous. Credit Karma, Credit Sesame, Credit.com. I feel like it's the waiter who doesn't need to take the menu down, you just take everybody's order and remembers it. I love that. Nerd Wallet, Wallet Hub, and there's an app, a finance app called Mint, M-I-N-T. It's a great app. My buddy who's an investment banker is the one who introduced me to that about 6 years ago. Phenomenal. Those, do you need a pen? Anyone need a pen? I got good pens, but it's from my mortgage company. I don't want to piss anybody off here. Anybody here mortgage people? No? I'm just trying to be respectful. Thank you. Any other questions?
Yeah, 2 questions. One, if you have a low credit score, sometimes getting credit cards is tough. You apply, you're nice. What would you recommend for our clients that, need to start getting those cards, build the credit, when they just have a low score there, then they get denied. Sure. Other than you know, those, what are called secured, where you basically put up your own money.
Yep.
You know, because, anyway, I'll wait.
Yeah, that's cool. It's a great question. And again, the question was, if you don't have credit, how do you get credit cards? And it's kind of like, if I don't have experience, you're not gonna give me a job. But if you don't give me a job, I never get the experience. It's that catch-22. So here's the answer to that. I have a link, if everybody wants to just circle at the bottom, my email. There's a link called Self-Lender. How many of you have heard of it? Self-Lender is one of those self-reporting lending loans. Basically what happens is, there's multiple. There's self, there's Credit Strong, there's SeedFi, SeedFi. The way they work is you essentially put money into it like it's a loan. You're paying automatic withdrawal. It reports to all 3 credit bureaus. And if you miss a payment, they basically just close your account. So they're not gonna say you missed a payment, they're just gonna close your account, say, hey, you didn't pay your bill, you didn't meet terms, sayonara. But at the end of the 12 months, instead of them taking out a 13th payment, they take out a small fee and they deposit all the money back into your account. And you can change how much money you want to put away. So for a lot of people, I say right now, and I have a referral link. If I'm being transparent, if I give you a referral and you open up an account, which I make lots of $10 things, $10 referral, I send it to so many people, they love it. What happens is you start now you have an extra $500. I used a $48, $49 a month plan. It's a great way to start saving, but it's $48, $49 a month. In 13 months, you get a $500 and some odd dollar check back. That's great for Christmas time. Start at Christmas time. There you go. No, you're welcome. Thank you. I have cards actually. I didn't hand those out. Yeah.
I had a question about,
Isn't that cool? I've had people say, I found your credit card, and I'm like, cool. They'll call me up and I'll be like, cool, and they're looking and they're like, wait a minute, it's not a credit card. Okay, I'm really sorry. I'm like, hey, just do me a favor, don't throw it out, hand it to somebody else. And they laugh.
Yeah.
But it's me just trying to brand myself, so God.
So other than kind of the self-funding
Yeah.
option,
So with Self-Lender, the way Self-Lender works is for the first 3 months, you pay your bill. On the 4th month, they're gonna offer you a credit card based on the balance that you have established with them. No credit inquiry. They just give you a card and then they report. And then it reports the self account and the credit card, both with no inquiries. And after 6 months, you'll have a great, not a great score, but you'll see significant. Every new account, they wait for 3 months. When any new account has 3 months of new on-time payment history, you'll see a little boost in your score. Okay? If you have 0 score, like when we pull FICO scores and it says NA, which means no score, essentially what that means is you have nothing, no history. It takes 6 months from that moment, once you open up your first account, to actually get a credit score. In that situation, if somebody has no credit or bad credit, sometimes the best thing to do is go get 2 or 3, secure credit cards. But Self-Lender, Credit Strong, Chime, you guys can write down Chime. Put down Chime credit card. There's a Chime marketing company, and it's unfortunately it's the same name, but Chime Credit Builder or Chime Credit Card is a great tool. You're gonna have to do secure in the beginning. Most times they're gonna have to do it. They don't have a choice. Somehow, somewhere or another, you have to put up some sort of collateral.
Someone talked to me about, something I saw on Instagram where people are buying lines of credit to use. And then that helps them boost credit, but it's kind of like gray area when it comes to legal, and that's why, it's like, I don't know, there's some kind of controversy in it, but basically they're buying lines of credit to use, and then it helps them mirror or boost their credit.
Mhm.
How does that work, or is that?
So anybody here know what an authorized user is?
I was gonna ask a question, so I'm gonna ask it, it's kind of the same as this. And I did this personally years ago.
Yep.
Back then, that was a trick, was,
Mhm.
you use your parents' credit card with their $100,000 limit. And apparently the credit bureaus don't buy into that anymore, is what I was told. But so I did that, probably 10 years ago. And it's all still there. So if I look at my credit utilization rate,
Mhm.
it's like 1%.
Okay. card on them from somebody above.
Yeah, because my dad, who has like an 840 credit score, the credit cards that he added my name to, his credit's through the wall too.
Sure.
But, and he pays them off every single month. But it doesn't affect my credit. My credit doesn't, I don't feel like I see any reward on it. I almost wonder if it hurts me because, like I said, it's huge limits and they get paid every month and I don't see a blip on my
So,
credit score.
The good thing is, I guarantee you, it's probably the oldest age of account that you have. It's not. Really?
No, I got my first credit card in.
So why did he add you then?
Because we were trying to get a mortgage at the time, and we were trying to up our score.
And so then it wasn't a card. So like the oldest account that was on mine was my dad gave me a credit card when I went to college. So at 17 years of age, I had a card added. But that card had already had like 5 years of credit history on it. So like when you look, like right now, I don't think it shows up anymore, but it was showing it was like 35 years or 20, whatever it was. It was some crazy number that I was like 10 years old or 12 years old. I would have been 12 years old based on the age of that card. So for you, it must have been something after the fact that he must have gotten a card later. Now, as long as the utilization is below 5 or 10%, it's okay. It's not going to hurt you. So that's fine. You don't need to have it on there. Any authorized user accounts, let's say, for example, let's just say he's your son, okay? You add him on your card. On his credit report, he's going to see your card, but it's going to say he's an authorized user, not the borrower.
Right. It won't affect my score that much.
It won't, it'll boost your score. If, let's say, you don't have much credit and he's got 5-10 years, $5,000 limit keeps his balance below 5%, that's going to boost your score. I've seen it boost people's scores like 60 to 100 points, depending on the age of that account. To go back to what you were saying, people do pay for that. So let's say, hey, he's his dad, but he's not your dad. He's like, I like you, but I don't love you that much. For $1,000 on it. There's a whole underground market where people sell trade lines.
Yeah, trade lines, that's what it was.
They're selling trade lines. So what it's saying is, I have a good credit score. I have great history. You need a boost? Sure, you're going to pay me $1,000 for 3 months and I'll give you this credit card.
How does that look like to a lender? Because they don't live in the same address. They're not mom and dad or brother and sister.
As long as you don't have any missed payments in the last 12 months, as long as your scores are good, they'll give you a look. You miss payments in the last 12 months, let's say you have a lot of collections and a lot of charge-offs,
Even if you're,
that's then where it may not quite help. Because you could have a score, it's not even always about the score. I've had people that had good qualifying credit scores and still got denied mortgage because they had a lot of collections and a lot of recent stuff. But that goes to show how quickly and easily you can sometimes manipulate credit scores based off of what's on there. Okay. Now, all the scoring models, missed payments is the worst. It's always been, it will always be the worst. Now, because of credit cards and how much they've grown and how many people now use them, credit card utilization, I've seen people, true story, we pulled a guy's credit. He had a $300 credit card, one credit card. His balance, his limit was $300. His balance was $418. We ran a simulator and it said, if you pay this card down to $5, your credit score will go up 100 points. And that's exactly what we did.
I see the opposite. When one of my clients just now ready to go for a mortgage, I mean, to buy another house, he wants to sell the house that she lives in now. He has a $300 American Eagle credit card that she just has not paid. She paid the mortgage on time, and had a score at 680 last year. She's down to like 525, and she has not paid that $300 balance. And
Was it one time or was it multiple times?
It's multiple times. She's probably had final notices and everything since March.
Yeah.
And I want to call her and say, everything okay? She has like money in the bank and everything. She just has not paid that one. So it's like one of those scenarios where you're like, you won't pay her, you can't pay her.
If she's got money in the bank, it's a won't. Now, what's really funny is people say, oh, they're trying to get one up on me. I don't owe that much. I'm not paying them anything. And they think I'm gonna stick it to them. Once that thing hits 30 days late, guess what? They just stuck it to you. Not only on top of the credit score, but the interest you're gonna pay. So then 32 days later, you're like, damn, I guess I'm not so smart anymore, right? You think you're sticking it to them. You think you're standing tall. You think, hey, yeah, man, you're not gonna push me around. Guess what? The banks will always win if you don't play by the rules.
I turned in a 4-year lease, because my wife hasn't drove in like 6 months,
Mhm.
and paid on time, 48 months, GMC Financial. The first time in 10 years after financing, 5 different cars with them all the time. They hit me with the $500 disposal fee. It's higher than even my lease payment.
Wow.
I'm like, I'm not paying that. They were like, well, yeah, you are. It's in the contract. I'm like, well, I paid my payments on time. Never had this disposal fee before. And they were like, because you kept getting new leases. So we're not waiting for this time. I'm like, well, you're not gonna get paid for it. And they're like, okay, is that your final estimate? Like, yeah. So 30 days later, so my credit score drops 45 points. And they like, it's almost like they put a new, they reopened the account even though it's satisfied for the funds. $500 late 30 days. So I paid it and I think it bumped it up 40 points.
Yeah.
So it was like, yeah, I learned my lesson.
And it's crazy how that happens. One time I had a lease and I took the car to a different dealership. I bought a different car and the lease that I financed it.
Sure.
I gave the key and I had a second key. I said, I'll give you the second key next week when I come back, because it was like an hour away. I found a car that I liked, hour away. Went back and gave him the key. 2 months later, I get a collection notice from Toyota. You have a $280 collection. I said, what for? They're like, you didn't return your key. I'm like, yes, I did. Like, I took it to the dealership. They're like, good luck, because they're not giving it to you. They probably throw it out. And they're like, you have two choices. We're letting you know, you either pay it or it's gonna go to the collection. And that's, the collections, I don't have them on the factors. The collections show up as derogatory marks. You know, basically, that's a collection, a charge off, anything along those lines. Could be a judgment, a tax lien, a bankruptcy. Okay, so, you know, they're just other things to know.
So just trying to understand with the authorized user type, you know, the situation I explained. So if somebody went out today, you know, like the example I gave, if I went with my dad, because I'm sure he has 10 credit cards, you know, Home Depot, Lowe's, you know, whatever, they use that, right?
Yep.
If I were to say, add me as an authorized user, you know, on all these, would that help my credit score?
It could, I mean, again, assuming that he's got history with those cards. So those cards have to have at least a year of history or more. Anything less than 12 months, it's not gonna really help you a whole lot. You wanna make sure that the utilization has to be below 10%. You know, if your current utilization right now is 2 or 3%, and he adds you to a card and your utilization bumps up to 7%, it depends then on how old the card is, how much credit that card has, and, you know, other factors in your score, because that could cause your score to go down. If you have no credit or minimal credit and you're at like 2 or 3%, even if your credit score, or even if the utilization goes up, because of the history of that card, that could still give you more points and boost your score. There's a lot of variables that go into that stuff. That's why when you play with simulators and stuff like that, it'll sometimes help you. Wallet Hub and NerdWallet, I think it's NerdWallet. They have a lot of great tools. If you want to see like mortgage calculators, if you want to see credit simulators, open up accounts. NerdWallet I love. I mean, I use them in Credit Karma. Credit Karma only because I can see my 6 factors in a quick snapshot. I don't have to go anywhere else. Everything's right there. That's why that's really important.
So if I understand you correctly, the authorized user part can help you
Yeah.
and won't hurt you.
It will only hurt you if that person has high balances and if they miss a payment. They miss a payment, your score will tank. For example, my dad
And I get that.
co-signed. He wasn't an authorized user. He co-signed. My brother missed a payment. My dad scored dropped 100 points. Whatever. What the hell, why didn't you tell me I would pay the bill? As an authorized user, it's the same way. As an authorized user runs up a lot of debt. Like I had somebody who their wife ran up a credit card the month before they went to buy a house. Didn't tell him. I ran their credit. He's on the credit card, but he doesn't check. He just is on the credit card. She gets the bill. He said, what the hell's this balance? I said, I don't know, it's a postcard. And he like flipped out because it was her credit card. He said, what the hell are you doing? So that's where that could hurt you. Now, there's a tactic called piggyback. Let's say, for example, you know, let's just say you guys are married and you're trying to build credit and she's trying to build credit. One of the best things you can do is, let's say you get a credit card and she gets a credit card. You add him as an authorized user, don't give him the card though. You add her as an authorized user on your card, don't give her the card. Now you have both cards, you have both cards. You're both basically using each other's credit limits to gain more accounts. So let's say you both got a credit card, that's 2 accounts, you both have 1 inquiry. And the authorized user thing doesn't really hurt you. They see that it's an authorized user, but they don't care as long as all the other factors are good. So being an authorized user, if you need, let's say, a husband's trying to get it, because he makes all the money, but the wife has the credit score, you can have her add him to accounts, and that'll boost his score.
That's our situation. Like my husband has shitty credit from, going back, but it's shitty.
From the
credit.
Strat Boy days.
Yes, that, yes. But he makes money. I have on W2 low income, but I have a great credit score, so I should add him on my account.
You would add them to your credit cards. But again, this is the reason, and again, it's very scary, most people, they don't like to do it. Have multiple credit cards. I don't care what anybody tells you. Look at them as seeds. This is how I take the analogy, okay? Let's say you wanted to grow fruit. Best time to grow fruit is 3 years ago. You take a seed, you drop it 2 inches below ground. That's your credit inquiry, 5 points on a 550 scale. That seed 2 inches below ground represents a new credit card you opened up, okay? That 2 inches below ground will grow to 20 feet above ground, assuming that you water it and take care of it. How does watering take care of it? Meaning, don't run up your credit cards. Pull the weeds. Make sure that thing grows healthy, okay? The 20 feet above ground represents the credit limit. Credit limit is represented by the utilization factor, okay? Make sure you're keeping those weeds low, let that tree grow, and eventually that tree will produce fruit. The fruit comes in the form of monthly on-time payments. On-time payments is 35% of your score. Healthy utilization is 30% of your score. Age of credit history, which are the roots from that tree which grow deep into the ground, the longer you have that account, the better off it is. How you doing, man? You need this room?
Yeah, well, you guys.
That's cool.
Okay, yeah, too. You
fine.
guys finishing up?
Yeah.
Okay, awesome.
But-
Thank you.
No problem at all. So
Yeah.
that's why in your situation, for him, it's better for him to open up a couple of his own trade lines, but then you can add him as an authorized user for 1 or 2 parts.
Should I go on his as an authorized user?
Only if you feel like you need it. I don't recommend people doing it unless they need it.
We don't, no, we don't.
Especially if, God forbid, I mean, I hate to say this, it's 2021, man. A lot of people end up divorced. I've seen people go to get something, they get all this shit credit from the
No,
outside.
we're gonna pay it off, like, he has a credit card that he pays off, I told him to start using it every day, pay it off every week.
Yep.
He uses that, we use debit mostly, to pay cash for everything, honestly.
Don't.
So what services do you provide for clients, as far as that may need some money to help them navigate?
So I have a couple things. The first is I have I do a one-on-one consultation, where literally I'll go in, have somebody use Credit Karma, and I'll show them, teach them everything that's good, what's bad, what's helping, what's hurting, and ways to, like I showed you, ways to start building some credit accounts for the card score. The second thing I do is like 12 months of coaching for $750. I can do $750 coaching to teach people how to get $750 scores. Okay, that's 12 months of coaching. I charge a big fee for that, but $500. But I guarantee you'll hit a $750 credit score. You may not do it in 12 months, but I'll guarantee the score, because I'll work with you until you get there. Most people after 5 or 6 months, I don't hear from them again because they already understand it's so ingrained in their brain, they don't need help anymore. But they needed help in the beginning to start getting those first couple of cards, understand where to go, what accounts to get, et cetera.
So your fee is basically $500 up for consultation, and you can teach them how to get ready.
Some people, they just do a one-time fee of $97 where they could.
So what's the difference between the 97 and 500? You're coaching.
I'll coach them until they get to that, until they get to the final destination. All right. But yeah, I mean, if you guys want to carry this on, I can go to another room, if you guys want, or we can set up another call.
Well, I got to go online, and I know a few clients that took care of it, but they get the, spend it all their money, having your information, go from there.
Write this down to
I did a good
www.
job.
72700.com. That's my group.
I left 727. That's friend. She was a great.
Seriously.
Thank you so much.
Yeah, thanks for having me.
Thank you.
You didn't win it all.
Dude, my money was on you guys.
Are you, yeah.
You beat me guys.
Bye, Zoom land.
Thanks for coming up.
Yeah.
Oh, what?
Bye, thank you.